Welcome back to Switzer from Perth tonight. Now, for those who've had enough of the POMs and their damn Brexit, let's check in with Investor Mutual's Anton Tagliaferro to see how he's playing the market right now. How are you, Anton?
I'm well, Peter. How are you?
Very good. Are you sick and tired of Brexit?
Oh, it's just nonsense, Peter, isn't it? I mean, you look at some of the falls in Australia on shares here and you just wonder, you know, how they're really linked into it. But yeah, you know, it's just one of those things, you know, markets, people's emotions taking over and people fearing the worst, which I'm not sure even what it is. But so I think there's a bit of panic, and I'm not really 100% sure why, really, you know.
Yeah, but I guess, yeah, you know the beasts that you play with and against in the stock market. I say beasts in the nicest possible way. There are those out there that look at, you know, question mark events like Brexit, like a Fed interest rate rise or not, Donald Trump, and they try to utilise it as an opportunity to short sell and hit the market. There's a bit of that going on, isn't there, surely?
Well, Peter, really, you know, when you think about stocks like National Australia Bank, which has been hit hard, like Suncorp, which has been hit hard, and you say to yourself, how are they linked to Brexit? You know, they don't have any operations in the UK. They don't do any business in the UK. They've been sold down. Obviously, I think it's, as you're saying, mainly traders and hedge funds trying to create a bit of noise, you know. And but again, when you look at some of those stocks which have got no exposure whatsoever to the UK, you have to say it's a bit of a blip, you know, a lot of noise about nothing, really.
Okay, but the interesting point is this. I agree with you on many fronts, but if the market still is reacting stupidly, how do you as a fund manager play that market? Do you say, look, I will gamble that the POMs will vote not to leave, and therefore I'll just buy these companies which now look like great value? Or do you have to, in a sense, wait to see what happens to then make a more confident decision? Even though you might miss the first uptick, you want to at least see what the Brexit vote ends up being, and then you chase those companies that have been unnecessarily belted up.
Well, Peter, I think there's a couple of words you use there which I tend to disagree with from the start. You know, I think you said we play and we gamble, which we'd never play or we gamble. You know, we're long-term investors. I knew you'd say that, Anton.
I gave that to you, Anton, as a free kick. I knew you would say that. But
you did not, Peter. I just caught you out.
That's our relationship. Listen, you're not a gambler.
I'm not a gambler. I don't hate gambling, but I love gambling stocks, but I don't like gambling. We can talk about Crown later. But Peter, look, as I said, you've just got to look at companies like NAB, which I think, you know, of the banks looks particularly cheap. You know, the dividend yield looks very attractive, even if you take 10% off because of capital or higher bad debts. You know, you're still buying it on a yield of 6% fully franked, even if you assume a cut. Suncorp, which has come a special dividend, you know, in August, which they normally pay every year to pay out the surplus capital. And you think, well, those companies have got to a level now. Now, look, they may fall a little bit more in the short term, but I think, again, you've really got to keep a medium. You know, Peter, I normally come on the show and you say, Anton, you're always bearish, you never like anything. Well, I'm telling you, these are opportunities which I look forward to, these sort of days, these sort of periods, when really, even if you think about the worst case, you know, Britain leaves the EU, well, how does that impact NAB and Suncorp? You know, I don't get the relevance. So all the bad news is being factored in anyway, whatever. Some of the stocks, as I said, which are being most sold down, they have no exposure whatsoever. So as I said, look, we may have missed the absolute bottom, but you know, I think, you know, in a week or two, whether Brexit happens or doesn't happen, it's being factored into share prices now anyway. And the reality is some of these stocks I'm talking about have no exposure anyway. So I think it's a good opportunity for people like ourselves who are value investors, who take a 3 to 5 year view, who've been a bit cashed up, as you know, waiting for these sort of times. It's a good opportunity to look around. I rarely get excited, you know, but I like these sort of down days, you know, because in reality, Peter, who would be selling their NAB today at 24.90? Like,
No,
it's
I'm
some
surprised.
hedge fund, and I'll say this, and I've said it before, you know, the daily volume on the stock market, I don't know what the number is, but I would estimate 50 to 70 to 80% of the volume is done by people or things who don't even know what they're buying or selling, you know? They're just shorting them.
Big call. All right, mate, now let's go to Crown. You mentioned Crown. You said you like betting stocks. Do you like Crown?
No, we don't. We don't own Crown.
No. So tell us why.
Well, because, you know, as you know, the company has got some very good Australian casinos, which are obviously the Melbourne, the Burswood Casino. They're the main assets here in Australia. The company also owns, you know, an interest in the Macau casinos, which have got a huge question mark in my mind, particularly with 2020 coming up when those casino licenses have got to be renewed. And also, you know, the Crown also owns a bit of land in Las Vegas. It also owns 20% of Norbu, a restaurant chain. So, you know, there's some good bits, which is the Australian casinos, which obviously generate cash, etc. But then, you know, a lot of that cash flow has been diverted into these other things offshore, which in my mind are higher risk. So the company is now proposing to demerge them, to split them up, and we've still got to understand what that all means. But at the end of the day, as I said, the Australian casinos, yes, they have a value. They're very good assets. They generate a lot of cash. The overseas assets, I still have my doubts.
Okay, what gambling stocks do you like then?
So we own Sky City Casino, which owns the Auckland, Darwin and Adelaide casinos. You know, the Auckland casino is doing extremely well. You know, pretty well managed company. So we own that one. We own some Tattersalls as well, which, you know, the Scratchies and the Lotto is quite a resilient, very good sort of annuity type businesses. Those are the main two that we own.
Okay, have you had a look at Star?
Yes, we've had a look at Star, Peter. It's had a big run. You know, it's one we missed, to be honest. We don't, unfortunately, get them all. Look, it's a good quality stock, but probably looks a bit expensive, you know, at these sort of levels.
Okay, so that's the gambling stocks. Are there any other sectors that you like at the moment?
Oh, look, Pete, I think it's on a case by case. You know, I mean, we were looking at Ansell today, which has been sold down very heavily. You know, it's very out of favour. Still one of the largest condom and industrial glove manufacturers and distributors in the world. You know, it's down to a P of 13, 14 times, which, you know, as I said, for a global company is a reasonable price, I think. You know, some of the utility stocks like Duet, which is on a yield of 7 or 8%, looks pretty safe, you know, in our book. So, look, it's very stock specific. I wouldn't say it's this sector or that sector. You've really got to go through, you know, on periods like these, you've got to go through a list of stocks and have a look at what's being priced attractively in this sort of mini panic, I suppose I'd call it.
Anton, thanks for joining us on the show, mate. As always, it's great interest. And it's nice to see...
No, you can't say I'm always negative, Pete, because you always say, you're always a big bear. Well, I'm telling you,
that's right.
I think this is these sort of periods, I've found in my experience, are not a bad time to sort of, you know, put out the feelers and start buying a couple of things on a 3 to 5 year view.
Anton, it's great to see you've turned from a grizzly bear to a teddy bear. I always wanted to see that.
Thank you, Pete. I'll do this.
Thank you, Anton.
Okay,
Thank you,
thanks, Pete.
Anton. Anton Tagliaferro from Investors Mutual.